Liquidity black hole is a theoretical but practically observed market phenomenon where market liquidity suddenly and dramatically vanishes, causing asset prices to plunge rapidly. This term describes a self reinforcing cycle of selling pressure that can be linked to a financial bank run on an asset or an entire market segment. This risk is particularly relevant in the mid cap and small cap segments, or less frequently traded scripts where liquidity is inherently lower than for large cap stocks. The core mechanism involves traders, especially those with short term horizons or strict loss limits, being forced to sell as prices fall near their thresholds. When a price decline occurs, perhaps due to an unexpected shock or negative news, it pushes a large number of such traders to liquidate their positions simultaneously. This selling surge aggravates the price decline, confirming other traders' fears and triggering their respective loss limits, thereby creating a cascading effect. In a healthy market, market makers and arbitrageurs step in to provide counter liquidity by buying undervalued assets. But during a black hole, they too retreat. They withdraw because the volatility and uncertainty increase the risk of holding inventory, and their own capital constraints or loss limits are activated. This collective withdrawal means there are few to no buyers left to absorb the massive supply of sell orders, leading to a profound disconnect. A liquidity black hole can cause an illiquid stock price to drop very steeply, even on moderate selling volume. This phenomenon manifests as a heavily one sided order flow and sharp, disorderly price movements that do not necessarily reflect a change in the company's fundamentals. Regulatory bodies like SEBI constantly monitor for such risks, implement measures like circuit breakers, and enhance surveillance to prevent the complete breakdown of orderly trading. However, the underlying risk of illiquidity and the coordination failure among sellers remains critical considerations for investors in the equity space.